If you are looking for a home loan, I'm going to show you why it pays to shop around for your home loan. And I'm going to do that by using an actual example from one of my clients. 2 weeks ago, a client comes to me and said, I've spoken to my lender and they said yes, and this is what they offered me. So under A, I've put it here what they offered him. You can see a rate of 4.15. Keep in mind, it's in a 95% LVR lend, so rates can be slightly higher. That means a repayment of $1,766 per month. This particular lender has an ongoing fee for an offset account at $299 per year. The LMI for this lender is $10,529. And remember, LMI is not always the same. So every lender charges a different LMI. But I said to him, I asked him, are you happy for me to give you other options? And the client said, of course, of course. So what I've found for him is another lender on the lender B. And you can see the rate is 3.79. So it's lower than the 4.15. It's still 95% LVR. The repayment obviously is slightly lower at $1,690. This particular lender has no ongoing fees, but still offers an offset account. And the LMI in this case is slightly cheaper. And you can see that just by looking at two options and looking at one probably slightly cheaper, you can see that the client is actually saving itself $299 per year in ongoing fees. It's saving itself about $291 in LMI, so that's something that you don't have to pay. Obviously, the repayment is slightly lower, but $76. So the difference here per month is $76. So what does it actually mean? Yes, of course, the loan with lender B looks like a better offer, but what does it actually mean? But first of all, it means that the client is paying $76 less per month. It's saving itself per year $299. And it's saving $291 in LMI. But what does it actually mean? Because you remember, the name of the game is minimizing the amount of total interest that you pay. So for example, in year one, at 4.15, the client would pay $14,960 in interest. With option B at 3.79, the interest would be $13,656. So you can see there's already a difference of $1,304 for that first year. So the client is already saving itself in interest payment $1,304. But what does that mean over the total term of the loan? You see, with lender A, over 30 years, the client would be paying $272,493 in total interest cost. With lender B, the client would be paying $245,397. That is a difference of $27,096. What would you do with $27,000? You see, the client is saving not only every year, but also overall. Now, here's the trick. If you're paying less per month, what do? Do you choose to pay less, or you choose to pay slightly more so that you pay less interest and pay off your loan faster? For example, if the client were to pay choose option B, and choose to pay $76 on top of the requirements and actually pay the same as here, they would basically save themselves $21,357 over the term of the loan, as well as pay off the loan 2 years and 3 months earlier. So you see, the client, by shopping around, is able to save thousands and thousands of dollars and pay the loan faster by doing nothing differently. The other thing as well is because he went directly to the bank and then came to me, I've also said to him, you qualify for, in WA, there's a home buyer's assistant scheme where you can have your settlement fees and other purchase fees reimbursed up to $2,000. So not only is the client now able to save these thousands of dollars every year and over the term of the loan, but also $2,000 for just qualifying as a first home buyer. So as you can see, it pays to shop around. Make sure you talk to a good broker. If you got any questions, let me know. If you like the video, make sure you share and like the video. I'll see you later. Bye.